Mortgage rates are showing a favorable trend this week. The average interest rate on a 30-year fixed-rate mortgage has dropped 6.901% APR, which is a decrease of 9 basis points from last week. This is a positive sign for potential homebuyers looking for more stable, long-term financing options. Similarly, the average rate on a 15-year fixed-rate mortgage is now at 6.08% APR, according to Zillow. This presents a great opportunity for those looking to save on interest payments and pay off their home loan faster. In the non-QM market, there are diverse options available for investors and unconventional borrowers. The SCR loans are averaging at a rate of 8.39% APR, offering real estate investor a viable way to finance rental properties based on rental income rather than personal income. For self-employed individuals, bank statement loans are available at an average rate of 10.5% APR. This alternative financing option is designed to help those who might not have traditional income documentation but can demonstrate their ability to repay through bank statements. Lastly, tax ID loans are at an average rate of 11.0% APR, providing a pathway to home ownership for non-residents who may not have a social security number but do have a tax identification number. Overall, the current mortgage rates reflect opportunities for a variety of homeowners and investors, secured financing under increasingly favorable conditions. Now let's dive into this week's key economic trends. CPR, what's happening with prices? Recently, a report showed that overall inflation increased by 0.3% in March, which is a little bit less than what experts predicted. Inflation measures how much prices have risen compared to last year, and it seems they went up 3.4%. In simple terms, if you bought a toy for $10 last year, this year it might cost you around $10.34. Not enough to break your bank, but you might have to skip that extra coffee. Shelter or housing costs, which make up nearly half of these calculations, rose by 0.4%. If you are renting, you might have noticed that rents went up by about 5.4% compared to last year. Now let's talk about jobless claims. Jobs and unemployment. Fewer people are applying for unemployment benefits, with the number falling to 222,000, but it is still a bit higher than the very low levels we have seen before. This means while fewer people are losing their jobs now, it is still not as good as it was. Housing starts and permits. Housing and building trends. Builders started on more homes this April, up by 5.7% from March. But when you look at the bigger picture, this is pretty much the same as last year. The number of permits for building new homes fell 3%, suggesting that there might be fewer new homes coming up next year. How does this affect you? All these changes in prices, shopping, shops, and housing affect how much things cost, including the interest you pay on loans and the value of houses. Right now, it looks like interest rates might drop by the end of the year, which could make loans cheaper. This is good if you are looking to buy a home or refinancing your mortgage. Meanwhile, fewer new homes mean the ones that are available might become more valuable. So if you own a home, its price might go up. However, even though waiting might seem like a good idea, because of dropping interest rate, this could be misleading, as fewer homes are being built and demand remains super strong. The prices of available homes is likely to increase. This means the home you plan to buy later could be significantly more expensive. Essentially, the money you save from lower interest rate could be offset by the higher prices of the home. So if you are considering buying a house, it might be smarter to act sooner rather than later to avoid higher costs. Think of it as buying your Halloween candy in August. It feels weird, but it will avoid the prices spike in October. Thank you for tuning in. Don't forget to follow me on Instagram or TikTok at Eli_Weissman. And remember our 3 promises to you. We will close your transaction on time. We will provide excellent communication during the pre-approval and loan process. We will follow up with your leads diligently, helping you gain even more referrals going forward. If you want these advantages working for you, give me a call, 718-807-7423. We greatly appreciate all your referrals. I'll be here to speak with you when you call, and I look forward to seeing you right here next week for our weekly market update. Have a great week. Bye-bye.